video, I wanted to talk about 5 ways of becoming a profitable Forex trader. Now, I've been doing this for 16 years now. I've been trading for 16 years, and I've been actually trading as a full-time income for the last over a year with a track record of 19 consecutive profitable months using my algorithms. So I specialize in creating algorithms that trade the Forex market. So in this video, I want to talk about the 5 main reasons of getting me to this point where I am today of trading, doing this as my job and trading full time. 1, staying away from these types of individuals. So these are the people that drive fancy, flashy cars and show them to you on Instagram or YouTube to try to entice you to follow them or to think that they're awesome and think that they are making a bunch of money with their trading. And they actually get away with not showing you pretty much any stats. The majority of these individuals only show you winning trades, and if you know anything about profiting in the Forex market, losses are very much a part of trading, and these people just never show you losses. So instead of looking for fancy, flashy cars or watches or houses, you should be looking at fancy, flashy track records. So track records that show you wins and losses and are longer than 6 months. And if the longer that you can find a track record, the more likely that this person is trustworthy. Number 2, risk management. Risk management is overlooked by the majority of traders out there. It's probably the main reason why 95% or more of traders actually lose in this market. There's not enough time spent in building out a risk management strategy that fits the trader's personality or the system or strategy that they're using. So 9 years ago, I actually started focusing in on risk management in a big way because I saw how important it was, and that's when my trading started turning around for the positive. And I started focusing in on 3 aspects within the risk management category. So that was multiple order trading, grid trading, and martingale. And these 3 types of techniques were very effective in the Forex market. And the reason why is because the Forex market it's huge. $6.6 trillion is traded on a daily basis. And there are so many things that drive currencies within the Forex market. So let's take, for example, the US dollar. The US dollar is affected by the US economy, obviously. The health of the US economy is affected by retail sales, consumer sales, the interest rates, the political scene, the natural disasters as well, the trade between each country. These are just a few things that drive the price of the US dollar versus other currencies in the world. And so it's important to realize that there are so many different aspects driving the prices. And then you have the big banks and the institutions that have all of the money that are pushing the prices in these directions based on what the economies are doing and sometimes what they're not doing. And that's when you come across manipulation. So with all these factors put into one market, you start to realize after trading so many years that this market is actually quite random. And building out a risk management strategy based on a market that is fairly random is a fairly important realization. And there's always been rumors and other people saying that, oh, this market isn't random. There's patterns, obviously patterns, because there's profitable traders. That is true. It's, I'm not saying that the market is completely random, just saying that a good portion of it is. And so it's important to build out risk management strategies that can work with a somewhat random market. Okay, so multiple order trading is something that I'm going to start with first. And it's because I find it to be the biggest asset in my trading, in my risk management, and probably the main reason why I'm a profitable trader and have been for the last almost 2 years now. So multiple order trading is effective because we can't always expect price to move in our intended direction when we enter a trade. The market will go against us, it will go for us, and it seems, it's great when it goes for us, but what happens when it goes against us? We can either have a stop loss, or we can decide to enter at a different price where we think that the market might reverse and go in our favor. And so we can't always expect price to move right on our entry point, even though sometimes it does. And so we have to be prepared for the times when it doesn't, so we can work our position out into a break even or a small profit or even sometimes a large profit, depending on where we re-enter into the market with our multiple trading risk management strategy. Okay, so grid trading, that is another type of multiple order strategy. And grid is based on a specific allotted amount within the Forex market. So if we're working with pips, then let's take, for example, 20 pip grid. So we're working with 20 pips, 20 pips, 20 pips, and we're going either against the position or for the position. So that means if the market goes 20 pips against our position, we enter on another trade. And if the market continues to go against our position, we enter another trade. And all this is done on a specific grid amount of 20 pips or whatever we choose it to be. And this can also be for the market going for us, and we can enter on a 20 pip grid when trades are going in our favor as well. So this is grid trading, and it's very effective. And the reason why it's effective is because we're coming back to this random market that I've been talking about. We can't always predict when the market will reverse. And so that's why grid trading is important, because we're working with price flow. Price flow within the Forex market is something that's really important. You've probably heard the saying, what goes up has to go down at some point. And that's why grid trading can be effective, because of that idea. It's really tricky and difficult to understand or know when price will actually reverse. And so that's why grid trading can be effective if it's used in a very calculated and conservative way. Okay, so the last thing that I'm going to be talking about is martingale, and this one is also effectively used in the currency or Forex market because it uses the casino type of doubling up your bet, right? But it doesn't have to be a perfect doubling up. It can be a different kind of risk management where you double up your position size every 2 or 3 or 4 orders. And it's very effective in this market because we're still, again, working with a market that's fairly random. And so getting more chances, just like we did at the casino, is a better way of coming out into profit. But martingale is very risky, and it can be really dangerous depending on how it's used. So it's really important to use martingale very conservatively, just like with any of the things I'm talking about here, so you can come out in a better place. So the more chances that you give your strategy using martingale, whether that's with multiple orders or with single orders, the more chances that you can give yourself without blowing your account or risking too much, the better. And so please be conservative with that, but it's also a very good aspect to be used when it comes to the Forex market in particular, when using risk management. Number 3, backtesting. Now, I find that most traders do backtesting in some form, but they don't do enough of it. It's typically 0 to 3 years of backtesting that a trader will do. And funny enough, most of these traders that are doing this amount of backtesting, upwards of 3 years, they usually will fail within that same amount of time. And it's really unfortunate, but I find that traders are not building robust enough strategies for long-term profit within the Forex market. So trying to build out a strategy with the risk management techniques that I've mentioned in step 2, and then trying to test those out within a backtest platform. So that can be something like MetaTrader 4 or MetaTrader 5. I specialize in MetaTrader 4, and allows me to download a lot of previous data and history, so I can start backtesting strategies either manually or through my algorithms. Through previous data. So we want to try to find past patterns or data that may possibly work in the future, and that's what backtesting is beneficial for. But as I mentioned before, we're dealing with a somewhat random market, and the market is actually changing on a daily basis, and so previous data doesn't mean, profiting from previous data doesn't mean profiting in the future, because the future hasn't happened yet. So backtesting can be tricky, and sometimes it can be completely useless, but it also can be very effective. And so we need to use it in a way that is somewhat effective, and doing that is by doing more of it, by doing as much of it as possible. Number 4, the reality of trading profits. Now, these are realistic gains. Like, what is realistic in this market? Because there are so many different individuals out there that are showing you 1,000% gains, turning a $1,000 balance into 100,000 in a matter of weeks or months. These are the kinds of results that are basically out there to entice you to follow that individual, to buy that product, to use that kind of strategy. And they're not really built to show long-term reliability or consistency in this market. And so it's important to start understanding what kind of profits are attainable in this market on a consistent basis, whether that is using a stop loss or using no stop loss. And so here I'm going to be showing you on Signal Start some results from some traders out there. These are not on my accounts. I'm going to show you some of mine in just a second as well. But these are from Signal Start, and these are individuals that have had accounts for a long period of time. You can see that it's really difficult to make huge gains when we're talking about long-term profitability within the Forex market. So these short-term gains from these individuals that have high gains, and you see that these accounts are much shorter time length. They haven't been going for a long period of time. And they are much higher with gains in the 20, 40, 50, even 100% every single month. And these kinds of results can't be kept up. Some individuals are able to keep them going for 3 to 6 months, or even I've seen some accounts able to do it for about a year, where they're making 20 to 40 and 50% every single month. But the same result always happens. These kinds of accounts will blow at some point. It's inevitable. So it's important to try to find strategies, or to at least realize what kind of profit is attainable on a consistent basis. And the longer that you find track records, the lower the profit that you usually will find. Number 5, a good trading system. Now this can be really tricky because this is a deep, dark hole that a lot of traders can fall into, and it's a bit of a trap because you constantly keep looking for that holy grail type of trading system that's going to make you a millionaire. And this is something where most traders' focus kind of relies on, and I think that it's not as important as you think. The risk management is, and that's why I have it as number 2 in this video. So building a good trading system can be tricky because of how many indicators there are out there for whatever platform that you're using. I specialize in MetaTrader 4, and MetaTrader 4 is an open platform, and there are more than probably 20,000 indicators that you can download for this platform. And so finding a good combination is something that can be tricky, but you have to know what you're trying to build. So is it a trend trading strategy? Is it a range trading strategy? Is it a scalping strategy? And try to find indicators that complement that idea really well. And so if you don't want to go down that path because of how time consuming it is, maybe it's good to try to find a system or a trading strategy that you can purchase somewhere. But you can probably find one that is effective online. And then build a really good risk management that fits your personality on top of it. Spend the time on the risk management, not spending the time on trying to find that perfect trading system, because the trading system isn't going to save you. Risk management will. I hope these 5 trading aspects will help you become a profitable long-term Forex trader, just like they did for me. All right, thanks so much for everybody for your support, and hopefully you can give me a thumbs up or a like, and hopefully you can subscribe as well. It really helps me out on this channel. Anyway, we'll see you on the next one. Thanks so much.